Not financial advice, simply my journey in margin. Hey everyone, welcome back to Leveraged Life, episode 11. This was a busy one, a genuinely rough week for markets, a lot of new activity in the account. We crossed into 32% margin, and I want to walk you through the full test bench I've got running right now. Let's get into it. Markets had a genuinely tough week. It started with a fresh U.S Iran escalation over the weekend. Trump reinstated what he called the Iranian blockade, a 20% fee on cargo shipping through the Strait of Hormuz. Oil spiked, markets sold off Monday. He walked the fee back Tuesday in favor of trade deals instead, and a much cooler than expected CPI report gave markets a brief lift midweek. But chip stocks were the real story. Semiconductor names sold off hard multiple sessions. TSMC's massive CapEx guidance spooked investors despite beating earnings, and the whole sector just kept bleeding. IBM crashed about 25% on earnings, its worst day ever. Netflix dropped 8% after hours on weak guidance heading into Friday. Net for the week, the S&P 500 fell 1.6%, the Nasdaq dropped 2.9%, and the Dow was down 0.9%. A real risk-off week, driven mostly by chip stocks and lingering Middle East tension. Now here's what actually happened in the account. New capital deployed this week, $2,955. And it's a big list. I topped up positions in UTS, Life, ZLB, ZLU, CDZ, and SDAY. I sized up EQCL by $880. I started MSHE as a single stock satellite test, and I opened two brand new test positions, ZDIV and XEI, plus added a new single stock satellite, GOGY. And I doubled down on ZEQT, my growth sleeve, buying another $500 into the dip during Friday's sell-off, bringing that position to $1,000 total. That's the plan we talked about a few weeks back, actually playing out in real time. Use pullbacks to build the total return side of the account. One honest number this week, $0 in distributions. Real accounts have lumpy weeks, and this was one of them. Nothing landed this particular week. I also opened my first options trade, sold a cash-secured put on NOK, a July 31st $10 strike, collecting $28 in premium. Still open, still resolving. I want to zoom out for a second because this account now has 6 genuinely different things running in it at once, and I think it's worth naming them clearly. First, the core, my Canadian income ETFs. That's the engine. That's what's been driving the account's yield this whole time. Second, a growth sleeve, ZEQT. Low yield, pure total return, and the plan is to lean into it more on pullbacks like this week's. Third, global high yield, EQCL. Broad, diversified equity exposure with a covered call overlay generating real income. Fourth, single stock satellites, MSHE and now GOGY. Testing whether concentrated, single-name covered call exposure adds anything the diversified core doesn't. Fifth, an options play, the NOK put, testing whether actively selling premium is worth the complexity. And I'm also toying with the idea of a sixth bucket, U.S.-listed daily income ETFs like TSPY and TDAC. Nothing bought yet, just something I'm researching for down the road. 6 different experiments, all visible, all real money. That's the channel. This is my journey learning in real time, using the market and leverage with real stakes and real trades. Quick update on the margin side. Last update, I said I'd cross 30%, and it felt like a good spot to pause and let distributions do some work. This week, margin actually ticked up to 32% because even in coast mode, I kept finding new things worth testing. I want to be straight about this on the new Payoff tracker I built, the one that's now live on the website too. It's currently showing about $1,900 behind where the model expected me to be at this point because the model assumed 0 new deployment and this week had plenty. That's not the strategy failing, that's just an honest mismatch between the plan and what I actually did. Once the testing phase settles down, that's when the real coast and paydown phase begins for real. Quick yield note. The account's snowball verified yield is sitting around 11%, weighted across current holdings. That figure predates this week's newest ads, so it'll shift a bit once ZDIV, XEI, and GOGY have real distribution history behind them. Against a 3.95% margin rate, that's still a wide cushion, even with zero distributions landing this particular week. That's the week. Rough market, busy account, an honest look at where the margin payoff tracker actually stands. Full breakdown and the live tracker are linked below and at leveragedlife.ca. See you next week. Thanks for watching. Truly appreciate it.